All right, traders, welcome to today's recap. It is Wednesday, the 31st, and this is Christian Fromhertz from Tribeca Trade Group. So of course, we've been saying this all week long. This is an action-packed week, and amongst all the events that we've already we've gotten through now. Being that a number of names reported after the close today, and we had Apple yesterday, we had the conclusion of the trade meeting. But really, I think the biggest thing for the week was the Fed meeting, right? So, uh, you know, this is I'll spend some time here and then we'll go over all today's movers, but I'll give you my take on this. And, if you've been following my videos and if you've been a member of Tribeca Trade Group for a while, you know that I've been through many of these, right, in my career as an institutional trader. These Fed meetings, they're always a bit of a tough day. I think really, with this market move and all the data points that were released, so first of all, the Fed cut 25 basis points. That was basically priced in. And I don't really think there was anything much of a shocker coming out of Powell. The press conference, again, is always where the heart of the information comes out. I did like what Josh Brown said on CNBC. He was saying that I don't understand why we need these press conferences. There's too many nitpicky questions, and it's just better when they just release the statement. Now, of course, they're doing a press conference now for every one of these meetings, even though or every month when there's a meeting, even though not all the months are live in terms of whether they adjust, but these press conferences are just there's sometimes just too much information that comes out and people read into it too much. So my opinion completely is, and of course this video is for information purposes only, because I'll say some more things here that are all my opinion, but the market expectations just got a little bit too ahead of themselves, and I've been saying this for the last couple weeks that I don't know why why the market is pricing in all these rate cuts. When the Fed it seems like it's nice that they kind of have the markets back, but it doesn't mean that they're going to go and schedule five rate cuts. I mean, I think that's really unrealistic expectations going into the meeting. So what did they say? They said that, yeah, I mean, if global conditions improve, of course they could put that cut back. Is that a shocker? No. If things really improve, I mean, the Fed is not just going to sit and cut rates. That's not what their job is to do to make the market go up. So that's number one, right? I think the expectations, and when I'm talking about expectations, it's the Fed fund futures, right? The Fed fund futures were implying like all these cuts for this year, which I just didn't agree with in the first place. What is it implying now? I just don't think that's realistic. If I haven't said that enough. So they're looking again for September 62, and these are after, right? This is already adjusted, but this is now a 63% chance of a cut in September. I just don't get it. I don't get why the market is pricing this in. Yes, I think globally the conditions have been deteriorating. Germany has had some economics that have come out that have been pretty ugly, especially on the manufacturing side. China continues to have weak numbers as well, but we just had consumer confidence that came out yesterday that was far exceeded expectations. So, and that's just one data point. We're going to get more. We're going to get new jobs number on Friday, but uh, you know, to root for bad numbers so that they cut rates, I just don't think is the right way to go. So that being said, that's kind of sums up the Fed meeting. So we did get some volatility, especially during that conference, which 5 minutes into it, when he started to talk about that. But anyway, I think that stealing what Helene Meisler said on Twitter, because I agree with it. I love when you could find people that you really agree with on Twitter. But this kind of takes a little bit of the complacency. I think everybody got a little bit too complacent with the market doing what it's doing. The market does go up and it goes down, right? So yes, S&P down 1.3%. I'm going to talk about the VIX in a second, but I mean, this is quite normal stuff for the market to come down once in a while. It shakes out all the weekends in the market. Sentiment was running a little bit too hot. I talked about sentiment. There's a Nasdaq sentiment index which is at an all-time high. We talked about the city panic euphoria index trickling up at euphoria. So this those are places where you really want to pay attention to what sentiment is, and if sentiment is too high, people get caught. It's just a matter of how the market works. So again, I would not read into too much other than the fact that expectations are too high for rate cutting. And again, I'm not saying that they're not going to do that for the rest of the year, but the Fed coming out and what do you think they're going to say? Yeah, we're going to cut three more times this year. That's you know ridiculous in my opinion. So we are holding. So July is over, right? July is finished. Um, we did stay above value, right? I mean, so we got a new month. This is the value area for August. It looks like we're going to be opening right below, or sorry, right on the bottom of value. One of the things that I wanted to say as well is that, when you look at the value area, which we did slice through and we were not able to take it back, but this is what's known as the 80% rule, right? When you start in any time frame, right? You could use this in any time frame if you're using the market webs indicator, but when you start above value in a period and you break inside value, there's not so again this is not there's no 100% certainty here, but there's an 80% chance statistically that you go all the way through to the bottom of value. So we did that, right, and we actually went below. So we'll just kind of have to see how this materializes for the rest of the week, as well as for August as well. So a couple other things that gave some really good clues, and we've been talking about this in every single video for the last week. And if you saw, I put out the video that from the pre-market session. I put that on Twitter 2 days ago, where I talked about. I spent 5 minutes talking about how all that VIX call buying is essentially giving you a really good signal. The VIX, we looked at the VIX, looked ripe for a move up. So this is what the VIX did today, and those call buyers got paid, right? They went after, and again, I try to mention this as many times as I could the last few days, but these were not like the $10,000 trades that people quote on Twitter all the time, the sweeps of $10,000. These were like $3 million, $4 million, $2 million, another $5 million of premium that they were throwing down on VIX calls, right? It's a little bit different than like, oh, somebody bought $10,000 of a small cap name in premium, right? That's going to cause momentum for like an hour. Much different. That's positioning going on in the VIX. So one day I think they took profits and they took about $1.5 million off the table, but they added a really nice looking trade today. This is a real savvy trade, I thought today. They put up this put spread, call spread. But you could see, there's a lot of positioning going on again today. Now I don't know if they're unwinding a lot of this, but where was the trade that I saw here? It might be further down. But they did a really nice call spread. It was a 1x2 call spread. I think it was like the 1724 call spread that they did for basically zero cost. So, this happens, right? I mean, especially when the VIX gets down to 12. So, so I'm really kind of going over things that I've rehashed, and if you didn't see any of my videos and you don't know what I'm talking about, you could go through. They're all on Twitter for the last week. So where does this leave us, right? And by the way, my P&L is down for the day today, even though I've been talking about all these concepts. While I've been trying to reduce as much exposure, I've been talking about, which I really did that a lot last Friday, where I reduced a lot of option positions. Stock positions, right? I'm still following the trend. It doesn't mean I go all to cash. You'll probably never see me do that, go 100% into cash. But what I like to do is reduce as many option positions as I can. If something didn't break, like I've got Lowe's calls on, and things like that. A couple swing trades on there. These are trades that I think, even though Lowe's kind of finished on the low, I think for the next couple months are okay. So I still have positions on. I'm still going to use options like I did today. I bought some SPY calls and took them off really quick. But I think really that's what options. The reason why I'm making this point now is because what are we going into? We're going into August and September. What do we right? I always like to talk about what we know and what we don't know, because there's so many there's a lot of things that are uncertain when you're trading. What we do know is that historically, August and September are a seasonally weak period of the year. So what does that mean to me? Is to keep my positioning a little bit lower than average, especially on the option side, right? On the stock side, as long as you're using a disciplined approach, that that's not a problem, right? You might get whipsawed and you might, lose out getting stopped out on some trades, but that's not the end of the world. Where you can really lose a lot of money, in my opinion, is when you put on option positions and you hold them for a while, and option positions don't age like a fine wine, right? They decay, especially if you're not getting the look the move that you're getting right away, and also if you're not in a seasonally strong period where we're in a nice uptrend, right? So that's just one day and just kind of rehashing. So again, I'm not getting bearish or anything like that, but I think from time to time these are really healthy pullbacks. Of course, it comes on a Fed day. All right, so that's my whole market spiel for today, which I usually rant on, and I usually do that in the morning in the pre-market sessions as well. So what got hit today? So I do like to. So besides kind of going over all that, uh, days like this, I do like to look at what areas outperform. So one of the crazy things that I saw today is the U.S. dollar, right, up 60 basis points. I was hoping that we would not have a full green bar, that it would maybe be a blow off top. I don't think you could say that at this point, right? So this is one thing that I do not like. The dollar getting this strong, that's going to affect a lot of companies, right? Especially companies that have more international uh, exposure, right? The stronger dollar is going to hurt them. So you have to be mindful of that too. So that's not a great look. What about bonds? Bonds have been kind of coiled a bit. This long bond, it looks like it resolved itself to the upside. So we were saying that this has kind of been in no man's land this week. It could either break or it could go higher. It chose to go higher today, and pretty decently, up 70 basis points. So you know a lot of things that some trends that we've been noticing the last couple weeks, or I'm sorry, not that far back. The last week is the move in banks. Are the banks going to love this? Probably not. However, they did hold their own today. We saw some BAC call buying today. Down 3/4 of a point. There's no damage, I would say, in the BAC chart. This is the one that I've been watching, as well as Goldman. Pretty much a regular day for these companies. So there were groups that barely budged today, which I find pretty interesting. Even though, especially the bonds should be sensitive to that long, um, to the long bond and to the yield curve, and and they did okay today, which is, again, sometimes you just have a little bit opposite of what you would expect. Gold, you couldn't really hang out in gold today because, again, that's going to be really affected by the dollar. So the dollar gets stronger. Unfortunately, metals sell off. Gold sold off pretty good. So this did not resolve itself to the upside. This is still kind of hanging out at the bottom of value. Gold miners got pretty beaten up today. They were down, let's see, 4.7%. So coming out of this flag the wrong way. Looks like they were kind of building here. So just might take a little bit more time. But again, big moves on these Fed days. What else? SMH, which I think was already down because of AMD. A couple earnings reports after the close, not so good. Qualcomm, I think they're down pretty decently. Mixed, in terms of all the earnings reports after the close today, I would say pretty mixed. Qualcomm down. I think Lam Research is down as well. Uh, Western Digital I saw was up, but now is flat. Also, if you look at some of the software plays, QLYS is down. AYX is up nicely, up to 123. 5.9 is also up. So again, it's tough, but this is stock. It's a stock pickers type market, with especially when you get into earnings season, right? So semis were down. They stayed down. They got hit. XME metals and mining again, stronger dollar hurting them. Software. So this is a group to watch in the next couple days. I've been taking. I do have some short put spreads on in a couple different names, but this group, you want to, in my opinion, right? You want to see this group come in a little bit, and I think buyers will come back to it. But no group is what's the right term is there are no hiding places, right, in the market. Groups like this are supposed to come in every once in a while. So software, I think will be interesting because if it holds that 50-day moving average, could be a nice buying opportunity. But you have to kind of hold on a little bit, maybe let this volatility come through. And I think that's the other thing. If you lost a little money today, my opinion is not to be rushed to get it back. Make sure that you're thinking things through for more than a couple days. Thinking about, because again, it is so difficult to time the market on a day-to-day basis. No one can do it. I don't know any famous and I hate to say this, but I don't know any famous day traders, right? I know a lot of famous swing traders, long-term traders, but it's very difficult to time the market on a day-to-day basis. All right, so we're hitting some big concepts today. So again, what did okay today? Retail unaffected, down 12 basis points today. What actually outperformed the best? I think solar was the best today, right? Up 2% on the back of ENPH. Let's see how this finished, how the solar ETF finished. And we did see some sun power and Sunrun calls a little bit today too. So tough looking candle for the day, but did make a new 52-week high in the solar ETF. All right, and that's pretty much it. We could go through some more names, but you could see the FANG names got beaten up today. Roku, I put on a day. Speaking of day trade, bad day trade in Roku today. So still hanging on to that, but that's what happens sometimes when you day trade. But here's the FANG stocks; they were all down. Microsoft down as well. Microsoft's new support is going to be 135.74, so we'll see if that holds for the next couple of days. All right, guys, so that's it. Again, I like to keep the videos under 20 minutes, but a lot to go through. These really huge event-driven weeks usually cause some havoc somewhere along the line. But again, the main message for this video, I don't think that the market expectations were correct and that's why we saw some volatility. But I don't think it really changes anything. I think the market does need to go down every once in a while to shake out some of the complacency in the market. So I think that this is perfectly normal to see pullbacks like this, especially I think what the one thing that I've been complaining about a little bit is that we've just been kind of grinding, and it's difficult to make money when the market just grinds unless you're in long-term positions. So perhaps the market volatility, whether it lasts just for today or spills over for a couple more days, which could also happen, I think is quite normal for the VIX to get back, trading around 15, 16 for a little bit. All right, guys, that's it for today. Have a great night. See you tomorrow.